The U.S. stock market opened mixed today, reflecting the cautious sentiment of investors. Major indexes such as the S&P 500, NASDAQ 100, and Dow Jones all fell slightly after a week of strong growth. The main reason came from political uncertainties related to the U.S. Federal Reserve. When President Donald Trump announced the dismissal of a Fed governor, this move immediately raised concerns about the independence of the central bank, causing long-term bond yields to fall, the U.S. dollar to weaken, and gold to rise as many investors turned to safe havens. Meanwhile, analysts from Barclays and Deutsche Bank said that, despite the political risks, the possibility of the Fed cutting interest rates at its September meeting is still very high if this happens. The U.S. stock market could be boosted, especially in technology and real estate stocks, which are sensitive to interest rates. However, in the short term, the Fed-related event has increased volatility. International investors are still keeping an eye on every new development from Washington, while also monitoring the trade tensions that the Trump administration is talking about. All of these factors create a contradictory picture. On one side, expectations of Fed easing. On the other side, political concerns about macroeconomic instability. At the end of the morning session, ETFs tracking U.S. stock indexes all fell slightly. SPDR S&P 500 fell to around 642. QQQ, representing NASDAQ 100, stood at nearly $570. And the Dow Jones Tracking Fund also fell to around $453. Although the decline was not large, it reflected investors' hesitation amid the overwhelming news. In short, the U.S. market is entering a sensitive period today. Investors should closely monitor signals from the Fed and consider more reasonable portfolio allocation, avoiding concentrated risks. For those interested in U.S. stocks, this time may be an opportunity to research and choose stocks with solid fundamentals instead of chasing short-term waves. If you are interested in market analysis, for more information and investment opportunities, follow the channel regularly for the fastest updates. Don't forget to like, share, and subscribe so you don't miss the latest videos.